Hello everybody, and a warm welcome everybody to this panel discussion centered around a lively debate touching on some of the most relevant areas of a recent study jointly developed and published by Currency Research and Lipis Advisors. The report, as Leo will explain in a short while, is pivoted around a survey to a balanced sample of central banks and focused on how COVID-19 has affected cash and digital payments policies. And it was commissioned at the behest of feedback that we were receiving from the global community. And this has been generously supported by our exclusive partners, MasterCard and the Clearinghouse, both of whom will be joining the panel today. My name is Gonzalo Santamaria, and I'm Vice President of Payments for Currency Research, and it's my distinguished pleasure to welcome everybody here today. For those of you connected just a few minutes earlier, you will have seen a slide deck with some of our initiatives, and you may know already that we're a knowledge-based services company focused on the cash and payments industry. Our main goal is to facilitate learning and networking opportunities, and to this end, we're focused on creating collaborations across the globe, from working with industry partners to key associations globally, to teaming up with events platforms such as Payments Canada Summit, where we are an exclusive global partner. We also publish key industry publications, as well as a number of research-driven reports, and all of these, we encourage you to look at that website to learn more. Lipis Advisors is a specialty consulting company with a vast experience, especially in the payment space, and led by Leo, who I'll introduce shortly as the moderator of today's panel. And partnering together with Lipis Advisors has been a really, really unique experience, and has given us a lot of advantage and added value in that we've been able to successfully take advantage of our core synergies. And these, of course, include our cumulative experience and credibility in both the cash and payments industries. So we have attendees, we have a really good crowd out there, and thank you for joining. You've registered from all corners of the globe, and we'll hope you find this discussion of really great interest. But most importantly is that you take advantage of the participation today, and whether that's by responding to the poll question, which will come up shortly, or posting your own questions in the chat function. So make this time work for you, and Leo will do his best to weave those questions into the discussion. So on behalf of us at Currency Research, Lipis Advisors team, and our partners, MasterCard and the Clearinghouse, I wish to again welcome you all today. And without further ado, I am delighted to hand over the virtual stage to my colleague and partner, Leo Lipis. Thank you all again for joining us. Stay safe and stay well. And over to you, Leo.
Thank you, Gonzalo. So thanks for that wonderful introduction, as well as the excellent description of the report that we've recently published along with you and your team, as well as the flattering words about the cooperation and how it's gone. I think from our perspective, it's also gone very well, which is why today I'm delighted to be here with this wonderful panel to present that research to you. You know, when we first conceived of this research program last summer, the idea really was to look at what are some of the unusual challenges that the COVID-19 pandemic has presented to central bankers. What questions has it posed in payments policy and in cash policy? Issues dealing with the lack of access to paper-based payment instruments, lack of access to cash for some people, stay-at-home orders preventing people from shopping in the ways in which they were accustomed, concerns around contact, concerns around hygiene, and so on and so forth. So the way in which we conceived the study was a survey of central bankers around the globe to shed light on how policymakers have responded to these unique set of challenges. So just a couple of notes before we get into the data, before I introduce the first poll question and then the panelists, which is that the survey was conceived sort of last summer, so early summer, and by the time that we had assembled the participants, as well as the sponsors, it was October. So the survey was conducted in October. The report summarizing the results was published in December. So it's still relatively fresh, although of course it doesn't reflect whatever has happened now in sort of wave 2 of the pandemic that we've been having through the winter months here in the Northern Hemisphere. just to give that as a to give that as background. What I would then I wanted to then, if we could put up the first poll, or the first question here. We have a poll for you. What we've got here, I'm trying to see, am I supposed to be, do we have the first slide as well, Helen? Okay. Let me just ask you this then. What we have here is we have, what do you see as the primary drivers? What are the key results from the research? Was that cash payments, okay, went down from about, as a share of payment type, okay, the cash payments went down from approximately 45% to about 35% at the start of the pandemic. Card payments increased from approximately 37% to about 40%. Direct debits stayed relatively stable. Credit transfers, however, went way up as well. And others. So here you go. There we go. There are the results we need to see. And what we have here then are the results. So I want you to take a look at these results, see what central bankers indicated in terms of changes to the share of different payment types in the markets before and after the pandemic. What do you see as the primary drivers of the decline in cash usage and the increase in digital payments since the start of the pandemic? We'll show you the results in a moment, and we'll compare the two of your results with those of the speakers. And in the meantime, if I can ask our other speakers to turn on their cameras, while you're answering the question, you can read the answers in front of you. We can introduce the speakers. So we have with us today three, I think, esteemed panelists. I'm very happy to be working with all three of you. We have, I'll go in alphabetical order here. We have Elena Whistler, who's Senior Vice President of Sales and Relationship Management at the Clearinghouse. She's responsible for overseeing the customer relationship, sales, and marketing teams, and managing and expanding the client base across the Clearinghouse's core payments products. Prior to joining the Clearinghouse, she had a lot of experience in the technology industry, as well as working at the Federal Reserve Bank in the retail product office. Next up, again in alphabetical order, is George Evers. George is Senior Vice President of the Customer Solutions Group of New Payment Platforms at MasterCard, and has spent 25 years working in financial services across a range of payments and financial services technology innovations. At MasterCard, he and his team are responsible for supporting the agendas of banks, government, and payment systems operators in their efforts to drive and respond to payments modernization opportunities. And he's played a key role in the development of payment modernization programs around the world, including the US, Thailand, the Nordics, and Latin America. Prior to joining MasterCard, he'd spent most of his career at RBS, the Royal Bank of Scotland, in various roles in digital channels, corporate banking, product management, and product development. Last but not least, we have Päivi Häkkinen, who's head of the Payment Systems Department and Chief Cashier at the Bank of Finland. The Payment Systems Department is responsible for central bank duties and cash supply and for oversight of payments and payment and settlement systems in Finland. It also analyzes the impact of digitalization to the financial sector and prepares the Bank of Finland policy related to cash and payment systems. Päivi has worked in various management positions, both in the private and public sector, and she's also been a member of several Eurosystem working groups. So we have a wealth of experience on our panel today. But the results that you'll see in front of you in just a moment reflect actually your perspective, the audience. If we can see the results from the survey, there we go. Very interesting. Okay, so here we see the primary driver of what people in the audience here believe is the primary driver of the decline in cash usage. We have 65% saying there have been changes in consumer purchasing channels. 2% saying changes to caps on merchant fees. Okay, so nobody believes that was a key driver, right? 30%, fewer merchants accepting paper-based payments. About half, hygiene concerns related to cash usage. A quarter saying inability to use paper-based payments. And then 35%, so a little over a third, saying increases in contactless limits, 7% other. So it's clear to say two clear winners here, right, of what people believe was really driving change. Number one was changes in consumer purchasing channels, right? We couldn't go to shops. Well, let me ask our panel, is there something here that you think is surprising or something that you think, or is this what the answers you would have expected?
Would you like to go first?
Oh, we'll pick on you, George, first then, okay? If you're going to ask, then we'll pick on you first.
Thank you. So first of all, it's not often I see a picture of myself and then I appear on the screen with more hair, but I think that's something we can thank COVID for. But so, yeah, I mean, I think this, this aligns, with our own research and our own insights. So we obviously have a perspective across both card and account-to-account payments, and undertook some research of our own, looking at consumers. So what emerged from there? So we spoke to about 14,000 people across 14 different countries. 64% saying they will use money much less following COVID-19. Reasons for that, digital payments, quicker, easier, more convenient than handling cash, but also the reality that a lot of their shopping moved online and became digital. Contactless is is well established in a number of territories, but actually quite new in a number of territories as well. So people are starting to get used to contactless being available, used to using it as well. And I think, if anything, the pandemic has really accelerated use of contactless already, and that makes a big dent in cash. And actually very well received. So we have 86% say that contactless payments are a convenient and easy way to pay. And about 60% said they felt that it was a safer way to pay them with cash in terms of some of the, and I think that's not linked to necessarily the physical COVID elements of cash. It's really, it's not carrying cash around. However, I think it's probably worth noting that still around 65% of people globally still agree that they still want to have the option to pay with cash whenever they want to. So there's not a huge vote against cash, although people recognizing the convenience and flexibility of non-cash approaches to payments.
Yeah,
Anybody else like to comment on that?
Yeah, I would agree with what George said. I think what we saw here in the United States too is a little bit of fluctuation in cash and circulation, depending on some of the government initiatives for economic impact payments, for example, that fed the economy a little bit and helped the American citizens. We certainly saw a bit of cash in terms of holdings. People held more cash, and they held higher denominations of cash to have. And then there was less, I would say, in terms of general circulation because of the shift towards e-commerce. So you had people that went to ATMs during certain times, and you could see those changes in cash distribution. That was mainly, anecdotally, I think more on storing that cash for a period of time and then using it more appropriately. And then we certainly saw most retailers open online presence in order to accept, card transactions or other forms to get the goods that they needed to get. Not specifically related to cash, but certainly the increase in digital payments was also on the B2B side. We're typically other forms of paper here in the US, check is still commonly used. That there was that, you could tell there was a shift. So there's always been a push towards digital, and the pandemic certainly accelerated that in a shorter period of time. And so we saw B2B activity start to occur more on the electronic side with the ACH and real-time faster payments.
Right. If I take up from Elena, this is an expert panel, and I think the expert panel has drawn the absolutely correct conclusions. There has been a huge change in consumer purchasing channels, and also what I would like to say, the perceived hygiene concerns of cash. There have been a lot of studies about the cash banknotes as virus carriers, and they have all shown that you don't get COVID from banknotes. You get it from droplets, and and other people's kind of heavy breathing, but not from banknotes. But anyway, I think the results are correct. However, I would like to add one more point in the analysis, and that is that not only the purchasing channels have changed, but the purchasing patterns and purchasing volumes have changed a lot. You can also see in card payments quite drastic decline in certain areas of businesses, and also those businesses where cash is usually used most heavily, which is in different events, in festivals, in bars, in restaurants. I mean, those were all closed, so there absolutely was no possibility of maintaining your payment habits, because those spending opportunities didn't exist. So the overall decline in consumer spending needs to be taken into account as well when you start to analyze the change in payment habits. Thank you.
Very interesting. I think those results. I'll put up the results here on the screen. This was actually the slide that I had intended to share with you before the polling question. Let me just share my screen now. Bear with me for just a moment. The easiest thing for me to do is just pop this up here. Okay.
I think it's worth noting, and I've seen a couple of the comments whilst you're getting the screen, that with the pandemic probably accelerated some trends, some pre-existing trends. Someone made a point around mobile, and we're certainly seeing the combination of things like real-time payments products and strong proxy or alias services, making huge inroads into what have been cash-based economies. So in Thailand, for example, the prompt pay service there is driving up at around 2 billion transactions a quarter now, from a standing start in 2017. And that is a combination of mobile adoption and real-time payment systems as well. So there are a number of areas where cash is already coming under pressure. And again, in Thailand, I think it was something like 90% cash economy, but this is taking 10 or so percentage points off what has been cash, but also enabling a whole range of digital and micro merchants to be able to trade as well. So there's infrastructure in place that I think would have been hugely valuable in the pandemic, and shown further growth.
Yeah, and I think one of the interesting things that came out from the research as well, and I think this confirms what you were just saying, George, is the way in which different types of economies have behaved in different ways. So because our survey sample included both developed and developing economies, and of course the four of us here on the panel, are all from relatively wealthy countries and with relatively well-developed networks for accepting cards and digital payments and other types of non-cash payments. But when we looked at certain developing economies, actually cash usage went up during the pandemic, despite whatever perceived concerns people might have, despite the fact that people thought it wasn't safe. So, and what was driving that was that's the way in which people could make payments, right? They had to go out and go shopping, right? They had to go out and buy whatever it is they needed to do, but they also had the need to hoard whatever little cash they had, because the bank system in some of these countries wasn't functioning as well as it could be or should be, or certainly not as well as it does, say, in Western Europe and North America. So as a result of that, we actually saw cash usage spike in some economies, which I thought was a very interesting development.
Also cash usage or cash savings, because in some developed countries as well, you could see that people wanted to withdraw cash in the beginning of the pandemic, but not to use it, but to make sure that they have cash available should it be needed. So some sort of seek for security by ensuring that you have cash. It was there also in the more digitalized payment environments.
Yeah. Sure. I guess this is an interesting question that's coming from the audience as well, and it was one that I was thinking about as well, which is, to what extent do we think that these changes will be sustained over time, or will we go back to the pre-COVID-19 norms that we had beforehand? So what changes to payment habits do you think will remain over the medium term, or which do you think will go back to the way they were? Elena, do you want to start with that one?
Yeah, sure. I think, and there was also a question in there about, the coin shortage here in the United States and kind of what the impact is. So maybe I'll clarify first on the coin shortage from our understanding. It's less about the supply of coin. It's more about that circulation. That was the issue here for a small period of time. Kind of what Päivi said, people just not circulating that or spending that is what triggered a bit of that coin shortage. What I'll say, in the US, household spending is still below pre-pandemic era, time. So it's still a little bit premature to think about kind of consumer habits and how they might have a long-term change, because our spending is still lower than that, than what we saw, 2019, for example. So as spending recovers, I think it is a natural expectation that cash usage will go up, as well as digital, payments will go up. I think consumer habits are difficult to predict. I never thought I could be inside my house for this long. But people's eating habits have changed. Everything has changed a little bit, but I have a sense that it will. This is my own prediction, but that it will likely go back in industry pockets to what it was before, because it was least friction. Whereas in other areas, and I brought up before, in the B2B space, and it could be small businesses and so on, the shift towards digital is a little bit more sticky because of what they had to do to become digital, to accept, bank transfers and in-card, virtual card, for example, and other transfers. They had to get onboarded. They had to maybe upgrade to a solution, software stack or something. I think that will be stickier and stick to digital, rather than, I think consumers will still want the choice, will still require it, and they likely will continue to fluctuate between, electronic digital means and cash.
I think there's another aspect of to this is not just around payments, but use of digital tools. So one of the kind of interesting piece of feedback from our research was that in the pandemic period, about 87% of people who had not used banking apps prior to COVID-19 agreed that they would continue to use them after the pandemic. So interestingly, that so that means in terms of just having to use some of the digital tools for financial management, and clearly those banking apps are a route through to making credit transfers and for paying for things online as well. I think it's probably accelerated the uptake of those, the confidence in people using them as well. So, and then you listen, it's nearly 96% of people said they'd use, personal banking online, and that's actually at 99% in China and India. Another, I think, positive impact was those groups of people that we sometimes see as being, slower adopters of some digital payments. So we've seen again, marked uptake in digital payments among the 65-year-olds, group that I'm sure feels a bit unfair, that typically are considered to be slower to embrace new technology. And around 60% of them said they found it easier using the banking app than they thought it would be, and 100% said they would continue to use that. So these are, quite sticky in terms of behaviors, in terms of building confidence around digital payments of all kinds.
Yes, I think my fellow panelists already said quite remarkable or important issues about the payment habits and how they are going to develop. I'm looking at the development from a perspective from a country where the digital payments have been every day for some time already. I mean, we have had recurrent payments electronic ever since the late 1990s, and card payments have been the most important payment instrument in the country already for over 10 years. But if you think about payment and habits, I mean, payments is something that you have to do in order to buy something. You don't necessarily go out thinking, how would I want to pay today? I mean, what would be the nicest way to pay today? You go shopping, you get what you need, and then you pay with the payment instrument you have available, or where you have a habit of paying. And then if you have read Charles Duhigg's book about the power of habits, you know how sticky the habits are. So what we have seen is that in our surveys, we classify people who mainly use payment card for their daily purchases. And then there's a group of people who mainly use cash for their daily purchases. And then there's a group of people, which has been a bit above 10% of all, who say that they use cash or card, whichever is kind of most convenient for the situation. And now in our latest survey, we can see that people who were these mixed users of both payment instruments, they have changed their habits, payment habits, and they have abandoned cash almost entirely. So what I see is the card usage remaining high, especially among the people who have been indifferent about it before, who have the card available, who are capable of using it. So now they have gone over to card, and I doubt if they are coming back to cash anymore. But on the other way, people who mainly pay with cash, they still mainly pay with cash. So it seems that there are restrictions in their digital payments. So I think we are going to have this group kind of staying in cash also in the future. Then I would like to come back to my previous comment about the businesses where cash is usually used. Whether people are going to go back to cash payments when they go to bars, when they go to concerts, when they go to festivals, stuff like that. Heaven knows. That's really a tricky question, and it remains to be seen. But it may well be that also the organizers are now better equipped with payment terminals, settles and stuff like that. So as a chief cashier in the central bank, to be honest with you, I am quite worried about the cash cycle and the future of our capability of keeping cash available and accepted in the society.
Fascinating. So I think there was a lot of rich material in there. One of the things that stuck out for me was this idea of how habits change and the changes that we've seen over the last year, right? Because when there's an external shock in the way in which we've had it, when there's a major disruption to the way that makes it impossible to do things in the way in which we're accustomed, right? We seek out other alternatives, right? To accomplish whatever it is we want to.
Had it been for a month or two, then people probably would have come back to their old habits. But now we have been in the middle of this for a year already. So now the habits start to stick. So you don't go back to old habits anymore.
Correct. And there's one of the interesting things I think that came out of the research, and I'm going to pop another slide up on the screen here. One of the other interesting things that came up out of the research was we asked central bankers in general, what policies have they put into place to promote non-cash payments, right? And you see here in particular, right, that we've had about 20% or so 25% said that they've changed the caps on contactless, on merchant fees, or presumably lowering them, right? About half say there were increases in contactless limits, right? I know that, for example, on domestic transactions here in Germany, we went from 20 euros to 50 euros in the early stages of the pandemic, lowering barriers to entry for fintechs. And then we had a significant portion said there were other things. Now, the other things had a large sort of basket of things in there. They included, mandates to merchants to lower the minimum transaction value for card transactions, right? We had some other ones about e-wallet credits, okay? And incentivizing the adoption of e-wallet based services. So that was sort of what was captured by that other category. I guess my question is, which do you see among these policies as having been most effective? And which do you think will remain in place over the long term?
Well, should I start?
Sure, go ahead, Päivi.
I mean, because I might be a bit an outlier here. In our case, we already have implemented the maximum amount for NFC payment for contactless payments, and there was actually a lot of discussion how could we have it higher, up to 80 euros perhaps. That needs EU regulation, of course. We don't have any minimum limits for card payments. So my main concern has not been how to promote digital payments. My main concern has been how to keep cash alive and relevant also in the future, because I fully believe that a well-functioning payment system needs various payment instruments for various situations and for various people. And we still need cash as part of that well-functioning payment system. So my concern has been really how to make sure that cash is still a relevant payment instrument also in the future.
Very interesting, and a strong contrast to what we often hear, I think, in the digital payments industry.
Yeah. Well, I think I find that other box bar quite interesting, because I think what it indicates is there are a whole range of things that are happening, that help to promote, non-cash. I think part of being an outlier in Finland, the cash usage is minuscule, isn't it? Versus where, if we talk about Thailand, where it's 90% cash economy, or was a few years ago. The UK has only recently dropped below 50% as well, so it's still very heavily used in many markets as well. So I think in many markets we're not at that area where there's concern about just cash being eliminated. And per my earlier point, there's still 65% of people want to have cash in the mix. So I think there's a real value in that perspective from Päivi in terms of having a balanced economy. I think we've been involved in there's been payment limit increases. I think in the UK it was announced today that it will go to £100 in terms of contactless. Interestingly, the public support for that, these lower amounts, I think for what were often cash transactions, a few pounds or under £30, there's a degree of comfort around contactless. There isn't, a huge amount of, support for raising it above that limit is not massive in terms of certainly the UK, and the feedback we get is that people are actually very happy with that £30 limit. So it going to 45 is useful. I'd be interested to see whether, the behavior, people are comfortable with tapping and going for £100 or not. So it'd be interesting to see whether the take up of those higher values is something that really works. But I think there are other areas, that we're involved in. So, some of the new real-time payment infrastructures are actually allowing economies to really make inroads into cash, because in essence, if you think about one of the characteristics of cash is you instantly have access to the value that's been exchanged, and you kind of instantly move that money. So I talked before about Thailand, but that instant payments platform that's deployed there, when combined with a very strong kind of mobile payments and proxy-led payment system, i.e. making it simple and easy for people to find the person they want to pay using their mobile phone number, or for government, the national ID, and then to send a digital payment. That is, I think, making it easier for people to confidently use digital payment systems as well. So I think that there's a whole mix of things that are being impacted here. And again, in terms of the point around lowering barriers to entry for fintechs, and initiatives such as open banking, etc., that again does it speeds up the digitization of economies, and it also has the ability to bring in more people to drive financial inclusion, bring more people into the banking system. Some of the other areas we're looking at as well. So in countries with very well established wallets and mobile offerings as well, they operate really well on a closed loop basis. So how do you get them to integrate within things like an acceptance network and give them the ability to be used outside of their closed loop as well? I think that again will drive digitization, and I think it acknowledges that value pools are being created in different places in this digital world. So how do you make sure those value pools are meaningful to the people whose value it is, i.e. the consumers and the small businesses, etc. So I think that remains a really strong digital opportunity, which is different to the opportunities that arise around heavy usage of cash.
Very interesting. Very interesting. So I wanted to remind people, incidentally, that there's a Q&A function in the tool. So if you do have questions, please do type them in there. We have been getting a number of questions, and actually I'd like to pull one up relatively quickly now, right? Which is that the idea that clearly the pandemic has led to a lot of hardship for people, right? It's led to economies being damaged. That governments around the world have supported their economies, have supported the unemployed in various ways, have supported businesses in many ways, and that the economic recovery from this pandemic clearly is going to take some time. What impact do you think that will? So the question that was seen here is, will cash be used as a budgeting tool more than before? But I think I'd like to broaden the question a little bit and say that what data do we have, or what do you, if in the absence of data, you're welcome to speculate as well about what effects that will have on the mix of payments that we're going to see in the future?
Well, that is a difficult question, actually. We do know that people tend to use cash for budgeting reasons. One of the advices actually you get if you are indebted and you have difficulties in managing your finances is that cut your credit cards and start using cash, because then you know exactly what you have. And you might kind of speculate that if the trace of the pandemic is long and the unemployment rate will stay high for a longer period, then of course we will have people in the society who have budgeting problems, and that might lead towards increased use of cash. But I certainly do not hope that to happen to save cash. I mean, I hope cash will be saved because of its own merit and not because people are doing poorly economically.
Yeah, no, I agree with Pavi. The one thing we've noticed here, and I was thinking back to the last question too, is so in the US, we're a bit market driven rather than, I would say, government policies on certain things like this. So limits are kind of focused more on the, merchant acquiring bank and other areas. On this topic, what we're starting to see more and more is financial education becoming extremely critical for a lot of, the payments ecosystem and organizations. So we know we've seen a lot of financial institutions, for example, take, allocated funds towards financial education, financial literacy, understanding the, just how to budget, be it in cash or envelopes or digital wallets that are made available. So we're starting to see that more and more to target to this group that previously didn't have the funds or availability to get that education. And I personally think education is first and foremost important in order to get people to a financial education level that they need to have to benefit themselves. So we are certainly seeing that in the US.
And in Europe as well, actually, the financial literacy, as it's called, it's really a topical item in all central banks and in our cooperation with different organizations and other authorities in the country. So that's really a good point.
And I think for us, if we talk about digital transactions, so I touched on financial inclusion and the benefits that emerge when people do have bank accounts and the ability to execute, to have something that is considered the equivalent of cash, so a debit card or the prompt pay system where the transfer is underpinned by real-time systems, and you have the real-time system in the US as well, with that integration with Zelle, means that in many respects people have a digital equivalent of cash. One of the interesting areas, that we're looking in, around, and actually this is a linked topic around open banking, is actually the ability for, the recent acquisition of Finicity, the ability, one of their key products and propositions in the US is the ability to use open banking methods to understand people's spending patterns, which are visible through a bank account or through digital transactions. I mean, the bank account may hold a record of someone removing cash as well, but you don't know what they do as well. It does provide opportunities to form, a credit assessment, a credit opinion of an individual who may just kind of be missed in, some of those broader ways of assessing credit, which might be what's their address, what's their fixed income, do we have lots of evidence of, they already have a credit card as well. So I think that's, it's an emerging opportunity, but that is something that is assisted when people use bank accounts and digital payment methods as well, because it creates a record for that. But they have to have, similar convenience to cash as well, in order for them to be usable for people who don't have a, ton of money just sitting there ready to spend with occasional spending on. I think there's another thing we touched on in the pre-meet, and I think it's a characteristic certainly that's been talked about here in the UK, is the pandemic in terms of, has increased the kind of a lot of hardships for a lot of people and a lot of businesses. But there is also a section of society who has been, I sit at home, I don't have to commute to work, I haven't been taking family on holiday as well. I read somewhere that in the UK there was estimates of somewhere like $125 billion worth of additional liquidity sitting within the banks from people who are spending less. In the US, you also have additional liquidity provisioned by, government paychecks going out to a lot of people, etc., and being banked and not necessarily used. I think it'll be interesting to see what emerges in terms of people's spending habits, etc., when the economy opens up physically in terms of people being able to travel, to move, to shop, etc. It may change.
I also saw reports in the press this past week that in the UK in particular, right, that when they announced that that most people would be vaccinated by the summertime, and the travel restrictions would probably be lifted, that within a matter of a couple of days, right, like the number of bookings for vacations went up by, like, I'm not sure what the numbers were, but there was some huge rush to book travel abroad. Yeah, which again, not surprising given that people have been bottled up as long as they have.
Yeah, I mean, Leo, on that point, sorry to interrupt, but we've seen a bit of a choppy supply chain. If you think about here in the US, when those economic impact payments were distributed, you had each American eligible received a portion of funds that they could go spend or revitalize the economy a little bit, all at the same time. So within a week they had funds and they go purchase something, whereas before, these businesses didn't have a lot. So all of a sudden their inventory is gone, or they need to go quickly do that. So that it is becoming very choppy. And I do wonder as here in the US, different states open up or different areas open up, how we can ease that in so that it might not be so choppy. I don't know what power we have to do that, but that certainly will be interesting to see.
From my perspective, I think the government benefits, they may have an impact in consumption, but they don't have an impact in payment habits, because all government subventions, they are paid digitally on your bank account, because everyone is entitled to a bank account and a payment card. So it's more about the personal perception, how people want to pay, or what is possible for them. Not everyone is able to use the PIN pad, for instance, or they are they would have the eyesight or stuff, things like that. So it's more about how people decide to pay, and not that somehow the environment would push them towards a certain payment instrument.
And if I can ask you, if I can follow up on that, I mean, what's been for us as a central banker, Päivi, what's been the most challenging aspect of managing policies around cash usage and cash processing for central banks during the pandemic?
Perhaps I can take up one short-term and one long-term issue. The short-term issue is that, of course, everyone working in the cash area, they need to work in the premises. I mean, they cannot distant work. And to make sure that all the contingency planning, all the protections are in place, it has been quite stressful, to be honest with you. We thought we had good plans, but the reality was different again. We have been having or leading a cash industry or cash cycle crisis group throughout the pandemic. First every week, now every 2 weeks, checking out how everything is running, how people are kept safe, whether the industry is doing okay. And if there is anyone from the cash industry, from the cash centers, CITs, I mean, I would like to use this opportunity to tell how much I appreciate your professionality, because how you have managed your people, your cash centers, the transports and everything, so that the ATMs have been working perfectly. I mean, that's really a professional work and can only be admired. But it has been quite stressful. Then the long-term kind of challenge is, of course, the role of cash in the future in the economy and society at large. And we have been working on several topics, doing a lot of analysis work, and we are prepared to go forward. I think one of the most interesting work streams in Europe, at least, is the European Commission's new working group on legal tender. And that is going to frame the role of cash in the society European-wide. And then inside that framework, we have to draw our own domestic conclusions. Thanks.
Okay. Very, very interesting. And it sort of leads me back to one of the questions that's up here that's been asked from the audience as well. It sort of leads me quite naturally into the topic of CBDC, of central bank digital currency, of cryptocurrencies. Is there any concern of people heading in that direction precisely to alleviate some of the challenges that you were just listing? So I guess some people have said, or in fact, the majority of central bankers in the survey believe that the COVID-19 pandemic will accelerate the launch of CBDC. And of course, we've seen a lot of announcements over the last 6 months or a year. Arguably, they've been accelerated perhaps because of COVID-19. But what impact do you see the pandemic having on the trajectory for central bank digital currencies?
As you know, I mean, almost every central bank is studying the topic and analyzing whether the idea of digitalized cash as legal tender or otherwise as central bank money would be warranted or needed. There are different motivations for different central banks. Some central banks talk about financial inclusion. Some central banks talk about the streamlining of the cash cycle, because the distribution and maintenance of cash lodgements is really a burden for them. And then, of course, from the ECB or Eurosystem perspective, the concerns about the future role of cash in the payments market in general, the ability of people to have and use central bank money, the functioning of the payments market, if there are initiatives which would not follow the European legislation, consumer protection, GDPR regulations, and those would kind of gain more space in the market. if the implementation of monetary policy would require that. I mean, these are the reasons that the Eurosystem or the ECB has named as motivations to consider issuance of digital euro. The COVID pandemic may accelerate the change in the role of cash, but whether that is a sufficient trigger for launching CBDC or digital euro, I'm not quite sure. I think we need to look at several aspects, and I wouldn't see a straightforward line from the pandemic and its impact on payment habits to the Eurosystem's willingness to issue digital euros.
Fair enough. Look, and in all fairness, I did that's quite the question. I said a majority, but it was a very slim majority, right? It was, as you see on the screen now, it's 54% said that they thought it would accelerate the launch, but 43%, said it will have no impact. So
it may have an indirect impact, not a direct impact.
Yeah. No, and I think that just to build on that, because I saw the question, is there a concern about possibility of cash users to move to cryptocurrency? So I think we probably need to create a separation from central bank issued digital currency, which is the method in which they issue and manage the currency today. And then, today payment systems that we operate are underpinned by central bank money or central bank accounts and balances. That's a common model. So in essence, this is the creation of another way of managing that technology. I think the question, my interpretation of this is it's slightly different. We're talking about cryptocurrency. So this is a non-central bank issued digital currency that we see a lot of news about as well. And my guess is that what this is saying is, look, if part of the benefit of cash is to drive certain areas of the economy so that people want to make invisible, then will cryptocurrencies replace cash for that? I think they probably already are in some instances. That seems to be the concerns around how what these currencies tend to be used for. So even if you can buy a Tesla with it, is that where all the money is typically being used? And is it the anonymity that comes with those cryptocurrencies? I'm sure that central bank issued digital currencies will not enable. So I mean, I think it's that is what I think is about. For the things that people want to buy with cash because they don't want anyone to know if they're buying them, then will cryptocurrencies replace that? And I think the reality is a lot of the growth for those cryptocurrencies did come from the dark web and things like that, isn't it?
Now I really have to kind of put on my central banker's hat and comment on that, George. I mean, first of all, cryptocurrencies. In common language, you often refer to distributed ledger technique, where the peer-to-peer network is maintaining the distributed ledger. We nowadays talk more about crypto assets because none of the so-called cryptocurrencies have proven to be of any use when it comes to payments. They are way too slow. They don't scale up. They consume too much energy. I mean, they are not payment instruments. But when you refer to that people who want to keep their purchases secret and they go from cash to cryptocurrencies, that may be true, but then we are talking about illegal purchases. We are talking about drugs, illegal arms, stuff that I would very much like to get rid of with cash as well. And these are the reasons why central banks don't want to talk about digital currencies. Central banks want to talk about digital euro. The People's Bank of China talk about digital yuan or e-yuan.
Right.
And we all agree that the distributed ledger and blockchain, I mean, they are not necessary. And why should you use a complicated technology on something which doesn't really benefit from it? So the digital euro is a completely different thing from digital currency, so-called digital currencies. But you are right when you are referring to initiatives like Diem or the former Libra, where a social media company was interested in launching on its platform a closed system for payments. And that may, if it succeeded, that may have an impact to the payments market, where the actors are regulated, where the actors follow the regulations and the rules and the laws kind of put on the payment systems. And that is, of course, a development which the central banks need to monitor very, very carefully. And that might be exactly the kind of distortion of the payments market which might trigger the central banks to take initiative and go forward with their own initiatives.
Yes. So actually, Päivi, I agree with you. I was trying to separate a central bank issued digital currency from these crypto and saying they are not the same.
So,
they are not the same. Yeah.
So I think I owe the three of you an apology for having taken the audience question, having combined it with what we have on the screen. So, and I guess I owe the audience an apology for having combined those two topics when in fact you just spent the last 5 minutes pulling them apart again. So anyway, so with that in mind, perhaps I'll turn my attention to another audience question, which I think could prove to be really interesting. Has the pandemic, right, and the way in which we've migrated away from cash payments toward digital payments led to an increase of fraud? Is there any evidence that that's the case, or has it led, perhaps even, I'll extend that a little bit, has it led to an increase in counterfeiting of cash? Might be another interesting aspect to that. And if so, what types of fraud are becoming more prevalent? Do we have data on this that you can share? And if so, how is the industry responding to that?
I don't have specific data statistics on it, but what I can say is, so we, as you move to digital, and people have quickly pivoted, I would say, to maybe digital or online presence they weren't before. Sometimes that opens up opportunities for identity, theft as an example, or account takeover in some cases, to initiate transactions to another account or something like that. I think that there's a natural consequence to pivoting and moving quickly to a new platform. I would say fraud is prevalent in a variety of different cases, and as habits shift and habits change to new forms and new methods, usually it travels and people try to find those new pockets or that are maybe not as secure as they should. But we've also seen significant effort and focus on fraud mitigation tactics, from the traditional know your customer, know your corporations, to newer software that leverages the same technology, automation tools, and data analytics to kind of help mitigate some of that.
And so I guess from our perspective, so identifying and managing the fraud landscape and the threat landscape across the digital network, this is a really core component of what we do within MasterCard across both card and account-to-account systems and real-time systems. So there is, as more transactions move online, in some respects that creates more opportunities, but it also provides greater visibility in terms of managing those threat metrics. So that is something we do day in, day out across both the card networks, but also more and more within the account-to-account network. So one of the things, it's a nice story in terms of the real-time networks. So in the UK, it's now 12-13 years old, but it emerged at about the same time that the people were migrating to the internet, and actually internet banking and mobile banking identified lots of new threats that people have been aware of, things like malware, etc., phishing, account takeover, and so on. So we've learned a lot in terms of dealing that, but some of our fraud systems that we operate here in the UK across the real-time networks that we run at a network level have helped us to actually light up. If we see the money move through a set of money mule accounts and we can track it through, then we can build, if we see that happening at scale across the country, then actually it gives us the ability to light up what are networks, organized networks of accounts that have either been taken over all the way through to businesses. So that's given us, that digitization of those money movements across that network have actually given us the ability to light it up. And that means that then we can work with the financial institutions that we support, work with their fraud forums, work with government to help try and remove what I consider to be the oxygen for account-to-account fraudulent movement of money, which is a bank account that you have control of or you've taken over. So that's an opportunity around real-time networks. But actually, the area where we worked a lot with the government here, certainly in the UK, and also I think it's probably a consideration for governments around the world, is actually the government is always the largest payer and receiver of monies around the world, but they've been making some quite exceptional payments through the pandemic as they've been, paying salaries and for staff who've been furloughed, and also, paying businesses to support them as we manage through the pandemic. And we've been working very closely with governments to try and make sure we understand where the money is going, who's already received it, etc., how many claims have been put in, because that I think became quite an active area of fraud during the pandemic. Different to payment fraud, which is, in terms of managing that threat landscape and supporting, consumers and businesses is BAU for us, but certainly a pandemic-specific challenge for governments as they started spraying money out to many different people and businesses.
Sure.
But can I ask you, George, maybe I didn't understand you correctly, but online shopping has usually been the most fraud-prone area in card payments.
Yeah.
And now that online shopping has been increasing, do you see that the fraud levels are increasing as well, or have you been able to manage that?
Yeah, so I think the tool, I think the tools available have become more sophisticated in terms of our ability to track and understand identity as part of that, and the fact that people do a lot on their mobile device provides actually opportunities to really understand who is it, what payments have they made, what have they done before as well. So again, digital provides enhanced clues and information that help us understand whether or not this feels like a fraudulent transaction as well. So those are areas where we have made grown the business significantly, especially around mobile transactions. And actually, whilst some of those tools were developed for card transactions, they're also very relevant for account-to-account transfers. So for me, logging to my online banking and paying a merchant or a business or even you, there's still the same clues in that device. So some of our capabilities have to support both card and account-to-account transfers because the clues are the same, i.e., you live in the UK, but all the Wi-Fi networks around you are Swedish. I'm not casting any aspersions on the Swedes there, but it's just you appear to be in a different country, which might mean that your phone has been stolen or it's been taken over. Even things like the phone isn't moving because it's been replicated on a server somewhere can give us clues. So I think those insights are really helpful in terms of managing those payment frauds. And then, of course, within one of the promises of MasterCard, for example, is providing safety and security for transactions when they do go wrong. So dealing with disputes, dealing with fraud, and providing protections to the consumers that are using those tools for payments. That's a huge part of the benefit that we see.
Okay. So I think we'll close out. I'd be interested. We've been talking a lot about sort of what's gone wrong, changes that we've had to make, and so on and so forth. But I think for me, one of the most remarkable things that's happened over the past year is that certainly in my experience as a small business owner, my experience as a consumer, my experience as a citizen, right, that the payment system has continued to work really, really well, right? It hasn't stumbled. And as Ivy mentioned earlier, everybody deserves a pat on the back, I think, for having accomplished that. We as an industry deserve a collective pat on the back for having accomplished that. Can I ask you, why has there been such a limited negative impact on the payment sector as a result of the pandemic? What went right? What have we been doing right? And what was the impetus for getting it that way?
if you think about electronic payments, I mean, they are highly automated. You don't need awfully many people to run the systems. And when the customer uses his or her card, the terminal sends the transaction over to the acquirer. It's automatically handled, distributed to issuers. The merchant gets his money. So I mean, we are not in the core of the pandemic because we have automated electronic systems in place. On the cash side, you do need people to do the work, and there the pressure has been much higher. And I think the industry has succeeded tremendously, so that when otherwise the society has been distressed, at least the payments have been running well, and there has been no excess stress based on payments or cash not functioning.
Maybe I could add to that, because I would agree. I mean, from our perspective, processing ACH transactions, real-time payments, wires, we as a company have been able to pivot quickly, work remotely, and have the staff that needs to be present to manage those isolated. But I will say in the US, and I know it's not necessarily cash, but on the check side, there's significant impact. And, so say last year it declined by, 14 to 20%. And that took a significant effort to move to digital, or to even process those checks, right? So there was significant impact there. But, thinking positively, maybe there has been a push for the last few years in particular, pre-pandemic, to move towards digital services. And that was happening at its own pace. And I think some of us feel like the pandemic accelerated that, what was naturally happening anyway. So thinking about habits, we were psychologically moving there. And so in the payment space, it was a natural acceleration. Whereas in other areas, it became a serious hindrance, for check processing, for example, for other areas that required a heavy lift.
I think there's one thing to add, as an organization that designs, develops, and most importantly operates these systems, is the payment systems are, and the ability for money to move in a market, they are the lifeblood of the economy in many respects. So the ability to pay, to get paid, etc. So therefore, for Vocalink in the UK, we are regulated by the Bank of England. They have oversight of the systems. It's true that many of these systems are considered to be systemically important. So we plan for the worst. The resilience, I think, is a really central component of what we do. So that automation is one thing. I think that provides the ability to scale and manage huge volumes of payments. But resilience and oversight is incredibly important, I think, in the design and development and operation of these systems, and that, I think, has helped to take these systems through the pandemic when more and more volume was put on them. I think there've been some rapid growth in areas, but I think they've performed well. But I think it's part of the core thinking and the ethos of people who design, develop, and operate those systems as well, that they must be available and resilient. Because if they're not, and people can't move money, and I've been, in the UK, there have been some bank system failures, and I've been, in a bank when that has happened, and it is very difficult situation to operate through, because the reality is that people can't see the money in their bank account, then they don't know if they've got it or not. Where is it? So it's really important to have that resilience, and that's why there is that level of oversight from central banks and the regulators in countries around those payment systems. I think that's entirely appropriate.
Very good. So I'm also happy to say that not only have we made it through the past year without our payment systems failing, but we've made it through more than an hour of conversation without having any technical issues on a video conference, which it seems to be a rarity these days as well. Admittedly, that's perhaps not as great an accomplishment, but I also see that the questions from the audience have largely dried up as well. I guess all that remains for me then is to say thanks to all of you for the hard work over the last year in keeping payment systems up and running, and thanks as well for your contributions over the last hour to this conversation. Gonzalo, I see you're here back again. I also want to thank you and your team at Currency Research for having worked with us on this project. We enjoyed it very much. I'm glad you did too. Also, last but not, or I guess not last, two more thank yous. One, of course, to MasterCard and the Clearinghouse, our sponsors on this research, and as well a big thank you to the audience today. We had a lot of people and a lot of interesting questions. Thank you for your participation. I hope you found it as interesting as I did. If you found it half as interesting as I did, I'll be a happy man. So thank you, Päivi, George, and Elena as well.
Thank you very much.
Thank you. It's been a pleasure.
Thank you, Päivi, Elena, George, and Leo especially. Thank you also for your for the great discussion and for the interest generated in the report. So, as everyone has seen probably in some of the posts, we've put a link in there for anybody who's wanted to see the full report. It's accessible. And you know, we wanted to also send a bit of a message of optimism as well, you know, with everything that's been going on, and now for a year that we've all been in this situation, we've been probing a bit of the world, and everyone is not only optimistic, but they're really eager to go out and meet face to face. I think we've had enough of this webinar business, and we're taking that to that next level, and we're really optimistic about some of the events that we're going to be holding back in the back end of the year by Q4, when we think we'll have the opportunity for people to be traveling again in a safe manner and feeling confident to be able to move around. So hopefully by the end of the year, we'll see folks at the Central Bank Payments Conference in November. And remember that the Currency Conference and Banknote event in February in Washington is now a combined super event. And so we hope to be able to see everybody there. Really looking forward to meeting people finally in person again. We're missing the contact, I think. So thank you everybody again for your participation, and thank you the attendees once again. And look forward to being in touch very soon in one way or another. Stay safe and stay well, everybody.
Thank you.
Thank you. Bye-bye.